This is the briefing for Tuesday, January 3rd. Happy New Year to everybody. I hope everybody's holidays went great. You were well rested and Santa brought you everything you wanted for Christmas and are looking forward to a great new year in the markets. I want to start the analysis. I haven't really done a briefing in about 2 weeks. I took the holidays off mainly because it was a low volume. It's a low volume time, and really not a whole lot goes on. And as you'll see, we did spend most of the time mostly in a rotational pattern, really not going anywhere, making any progress to the upside or the downside. This is a weekly chart of the SPY, the spiders, and you can see that the market is basically in a downtrend with a series of lower highs and lower lows. And you can see that those lower highs really have not been broken, at least as of yet. So the downtrend, at least for right now, is still in effect. And you can see even on this last rally that started back in October, you can see that we still have not broken the last previous high. And now we've started what looks like another rotation back to the downside. Now, I want to cover something here just briefly that I think it's a low probability, but I really think we need to keep it in the back of our heads because if we break out of the current consolidation and break out to the upside, I think that this scenario or this strategy is going to become a higher probability. So we know that the markets run and pause in all degrees of time. You get a run, pause, run, pause, run, pause. And then in a greater degree time frame, we get a counter trend rotation, which is greater in degree of time and price than the time frame we're looking at. And it develops by taking out the previous, in this case, lower high. Now, one of the things that is happening here is you can see that this is a rotation up. This appears to be the beginning of a rotation down, and you can see these three candles. That represents 3 weeks of trading. So you can see the rotational pattern that the market has been in for the last 3 weeks. Breaking to the upside of this rotation, and I'll get to this in a shorter term time frame as well. We'll look at it on a daily chart. Breaking that extreme to the upside could suggest the possibility that this is developing into a greater degree time and price counter trend rotation, where this is a move to the downside, this is a move to the upside in leg 1, this is leg 2, and leg 3 could be developing, which would be about the same in length as leg 1. At least that's one of the characteristics of a counter trend rotation. So while I'm not giving this a lot of credence, at least at this point in time, I have to be aware that breaking to the upside is going to open up a potential test of this high coming in right around the 410 area. And then if that's broken, then that would then suggest that this is a leg 1, this is leg 2, and leg 3 is in the process of developing, which could bring the spiders up to about the 440 area. And then we would have to determine the strength of the rally at that point in time to determine whether this was a counter trend rotation to this and that we're seeing the beginning of another leg back to the upside. So that's just a little bit of perspective from the potential for a longer term development and the potential for a bullish case. And I think that's not something that I'm looking at in terms of my immediate strategy, in terms of developing a strategy for trading for at least this week and this month, but something that I'm going to be watching for very, very carefully in the coming days. Now, where we are on a shorter term basis, here's the rotation we've been in for about the last 2 weeks. This is the spiders on a daily basis. You can see volume has been falling off, and I've talked about that previously, that volume typically falls off during the Christmas and New Year's holiday as traders really just step aside and take time off with their families. So it appeared today that we were going to potentially break to the downside. We opened up higher and then immediately sold off, and it appeared that was potentially the possibility. Now you can see there's a buying candle here. The buyer stepped in and stopped the slide. sellers came in and stopped the rally that we opened higher today with, and we ended up with a day that neither buyers nor sellers could gain control of the market. Same thing in the Qs. You can see the selling tail here and the buying tail that came in here. 270 is the upper extreme of the Qs. About the 390 area is upper extreme for the spiders. And then, of course, the diamonds representing the Dow Industrials. Series of, it's a little bit different chart pattern. This really is a rally in the industrials. And you can see it's a series of higher highs and higher lows. And then, of course, we got this break of this low here, suggesting that this was developing into something greater in degree of time and price to the downside, correcting this rally. Now, you can see the rotation that's occurred here in the industrials. Looking at about 335, a break of that to the upside is going to open up potential test of this high right around the 348 to 350 level. But a break of around the 326 area, that's going to suggest the Dow potentially is going to continue correcting to the downside. In the Qs, we're looking at really around the 260 area. If that level is broken, that's going to suggest the potential for a test of the October lows. But watch what happens at 270. Breaking 270 is going to open up a potential test of 280. So right now, we have this rotational pattern in the indices that really is giving us the potential for a breakout and a potential move in one direction or the other in the direction of the breakout, assuming the internals confirm that move. Now, I got a little bit chopped up in today's trading, mainly because I anticipated when we broke through here, I anticipated that we were going to see some type of a move down to test 375, and if that was tested, I expected a potential break. But of course, the buying came in, and I exited my small short position pretty quickly, and then just stood aside. The rest of the day was just going to be a lot of chop, so not a whole lot happening there. In terms of where we are, this is the rotation in the spiders that you can see. Now, breaking about this 375 area is going to open up a test of 370, which is this low back here. And then, of course, that would open up testing the October lows. But looking at the NASDAQ or the Qs, you can see the Qs are already testing this area. So we have an intermarket divergence between the S&Ps and the NASDAQ. And you can see that the Qs really looked like they wanted to break out, or the NASDAQ wanted to break to the downside in today's trading, but buyers came in and stopped that slide. So the resolution to this area of rotation is going to be very, very important in the coming days. And the same thing's going on in the Russell, just a rotational pattern. And I would caution that trading within this range, unless you're basically day trading, because it is just very easy to get chopped up in this back and forth movement that we saw in today's trading. And this is a 30-minute chart of the spiders, and you can see this was the open today, and you can see how it was just a lot of chop. Same thing in the Qs, just a lot of chop for the day. Now, in terms of where we are neither overbought nor oversold. Now, breadth in today's trading was barely positive, which should have been an indication that there was really no direction for the indices, at least in today's trading. I want to note in the NASDAQ that the indicator has converged, which suggests a tightening and a potential break in one direction or another. Because it's neutral, it doesn't give us an indication of which direction it's going to break. But it should be very, very important to watch what happens with the extremes in these areas right through here. Going to be very, very important in the coming days. And then in terms of volume, you can see we finally had a tick up in volume. This was the option expiration Friday, and then we always get volume spikes on option expiration, monthly option expiration Fridays. And then, of course, volume absolutely collapsed. Same thing in the NASDAQ. Volume collapsed through the holidays, and now we're starting to see a pickup in volume today. So assuming we can see a continued pickup in volume and we see a breakout of the rotational pattern we've been in for the last 2 weeks, we should give us a pretty good indication of the next greater degree time and price move. and I'm going to be watching for the development of this potential strategy of what happens if we break out of here. And then, of course, is this going to be something greater where we test the 440 area? And going back to the S&Ps, you can see 430 to 440 is going to be the potential for a really good, good potential move. Now, in following along with that, if you remember, now in my briefings, I talked about this move here and projected that this was a counter trend move as soon as this high was taken out. And it projected up to about 390, where leg 1 was equal to leg 3. As this developed here, and because we couldn't trade much below this, and we saw this was a day where neither buyers nor sellers could gain control, and then buyers gained control the very next day, that suggested that this was a leg 1. And I talked about it in the briefings about this being a more complex counter trend rotation, where this was leg 1, 2, 3. This was a leg 1 in a greater degree time frame, leg 2, and leg 3 projected to 410, which is exactly where the spiders went to. Now, this could be even developing into an even more complex, longer term counter trend rotation, where this is leg 1, this is leg 2, and leg 3 could take us up to the 430 to 440 area. I haven't done the numbers as to the extent of this, where there would be equality between legs 1 and 3, but I'll do that potentially for tomorrow's trading. Watch what happens to break out of this. This area here is just really, really important for this week. Have a great night, and we'll pick this back up again tomorrow.